Have you ever wondered what a Bitcoin ETF is? Well, let's dive into it. ETF stands for Exchange Traded Fund, a type of investment fund and exchange-traded product, traded on stock exchanges just like individual stocks. Now, a Bitcoin ETF is a special breed of these funds. It specifically tracks the price of Bitcoin, one of the world's most popular cryptocurrencies. Think of it as a bridge that merges the traditional finance world with the innovative digital world of cryptocurrencies. Bitcoin ETFs allow investors to tap into the price movements of Bitcoin without the complexities of buying and storing the actual digital currency. It's like investing in gold without having to store the physical bars at home. This makes it a more accessible and manageable way to invest in Bitcoin for many investors. So, in essence, a Bitcoin ETF is a fund that mimics the price of Bitcoin, allowing investors to buy into the fund and indirectly invest in Bitcoin. Now, you may be asking, how does a Bitcoin ETF work? Well, let's dive right in. A Bitcoin exchange-traded fund, or ETF for short, is a type of investment fund and exchange-traded product that is designed to follow the price of Bitcoin. It's like a bridge that connects the traditional financial markets with the new-age cryptocurrency markets. So, here's the interesting part. When you invest in a Bitcoin ETF, you're not directly buying Bitcoin itself. Instead, you're buying shares in a fund that holds Bitcoin. The fund tracks the value of Bitcoin, and the price of your shares in the ETF will fluctuate based on Bitcoin's market price. What's the benefit of this? It's simple. You get to participate in the Bitcoin market without the need to buy and store actual Bitcoin. You don't have to worry about digital wallets, private keys, or the possibility of losing your Bitcoin to hackers. And since these ETFs are traded on traditional stock exchanges, you can buy and sell your shares just like any other stock. You can use your regular brokerage account, and you don't need to go through a cryptocurrency exchange. This is a game changer for many investors. It opens up the world of Bitcoin investment to those who are comfortable with traditional investing methods, but who might be wary of the complexities and security risks associated with buying actual Bitcoin. And there's another significant advantage. With a Bitcoin ETF, the fund manager is responsible for maintaining the security of the Bitcoin holdings. This means they have to follow strict regulatory standards, which adds an extra layer of protection for investors. But remember, investing in a Bitcoin ETF still exposes you to the volatility of the Bitcoin market. Bitcoin's price can rise or fall dramatically in a short amount of time, and this will directly affect the value of your ETF shares. Therefore, Bitcoin ETFs simplify the process of investing in Bitcoin, making it accessible to a broader range of investors. So whether you're a seasoned investor or just getting started, a Bitcoin ETF could be a smart way to dip your toes into the world of cryptocurrency. You might be wondering, what are the benefits of investing in a Bitcoin ETF? Well, there are several compelling reasons. Firstly, investing in a Bitcoin ETF is simple. Unlike buying Bitcoin directly, which requires you to set up a digital wallet and manage private keys, investing in a Bitcoin ETF is as straightforward as buying shares of a regular stock. You can do it through your existing brokerage account without having to navigate the often complex world of cryptocurrency exchanges. Secondly, safety. When you invest in a Bitcoin ETF, you're not actually holding Bitcoin yourself. This means you don't have to worry about losing your Bitcoin to hacking or theft, which can be a significant concern with direct Bitcoin ownership. The ETF provider takes on the responsibility of maintaining the security of the Bitcoin holdings, and they have stringent security measures in place to protect against potential threats. Thirdly, a Bitcoin ETF provides the flexibility to trade shares just like a regular stock. You can buy and sell shares of a Bitcoin ETF throughout the trading day at market prices. This is different from direct Bitcoin ownership, where you might have to wait for transactions to be confirmed on the blockchain, which can take time. With a Bitcoin ETF, you have the flexibility to react quickly to market movements. Lastly, investing in a Bitcoin ETF offers the potential for high returns. Bitcoin is known for its price volatility, and while this can certainly present risks, it also presents opportunities for significant gains. If you believe in the long-term potential of Bitcoin, but don't want to deal with the complexities and risks of direct ownership, a Bitcoin ETF could be a good choice. In conclusion, a Bitcoin ETF offers a way to gain exposure to Bitcoin without the need for direct ownership. It provides simplicity, safety, flexibility, and potential for high returns. Investing in a Bitcoin ETF can thus be a safer, simpler, and potentially lucrative way to gain exposure to Bitcoin. But what should you keep in mind before investing in a Bitcoin ETF? Well, as with any investment, there are some critical considerations to bear in mind. One of the most significant factors is the volatility of Bitcoin's price. Bitcoin, as we know, is a highly volatile asset, and its price can fluctuate wildly in short periods. This volatility could affect the value of your Bitcoin ETF investment, so it's crucial to be aware of this risk before diving in. Another key consideration is the fees associated with ETFs. Bitcoin ETFs, like other types of ETFs, come with associated fees that could eat into your investment returns. These can include management fees, which are paid to the fund manager for their services, and transaction fees, which are incurred whenever you buy or sell shares in the ETF. It's important to understand these fees and how they might impact your overall return on investment. Of course, the importance of doing thorough research before investing cannot be overstated. Understanding the intricacies of Bitcoin and the workings of ETFs is crucial. Look into the fund's strategy, the team behind it, and its past performance. It's also a good idea to keep an eye on the broader market trends and the regulatory landscape for cryptocurrencies. Remember, while Bitcoin ETFs offer an easier and potentially safer way to access the Bitcoin market, they are not without risks. As with any investment opportunity, the potential for high returns comes with the potential for significant losses. To wrap things up, let's reiterate the benefits of Bitcoin ETFs. They offer a way to gain exposure to Bitcoin without the need to buy and store the cryptocurrency directly. This can be a safer, more convenient option for many investors. With the right knowledge and understanding, investing in a Bitcoin ETF could be an exciting addition to your investment portfolio. Remember, knowledge is power when it comes to investing.